Welcome to the Aro Benaiah show. Today I'm joined by Ed Parcaut, engaged experts, veteran, author on financial freedom, building personal wealth through homes ownership, and a host of real estate jockey with over 25 years of experience. Eddie has helped countless people use real estate as a tool for financial freedom. Let's dive into the journey and the lesson he has for us today. It's good to have you on the show, Eddie.
Appreciate being here.
What was it like growing up?
I ended up being dirt road poor, if you understand what that means. It means we had money, my dad died, and we had no money. So,
Ouch.
yeah. So everybody thinks everybody has money in the United States. Not true. So,
So what course of job did you actually get started with before you venture into what you do?
let's see. When I was a kid, I milked cows at my grandfather's dairy. And then I ended up working at a retail restaurant called Der Wiener Schnitzel here in Modesto, California. And then I joined the Navy. And then in the Navy, I got my bachelor's and master's. And then I got basically I fell into the mortgage industry I was in the computer industry for a short period of time and then got into the mortgage industry. And I've been in it ever since.
Wow, amazing. And you serve in the US or Navy. How did your military experience shape the way you see life and business?
Well, so in the military, they teach you attention to detail. You do these things called SOP, standards and practices, and that's how we look at things totally different than everybody else because no, it's just a totally different world, totally different way of looking at things. 50% of veterans who get out of the military are business owners.
Ouch. Wow, that means there must be a lot in the military that actually more like teach a whole lot of persons about entrepreneurship, owing to the attention to details that you just make reference of. So your first pull you into mortgage industry. What was the first thing that actually pulled you into mortgage industries?
You said what pulled me into the mortgage industry?
Yeah,
Yeah.
yes.
Okay. I'm sorry, it's my accent. It's a little harder sometimes.
No problem. Thank you.
So what happened is so I was doing a bunch of stuff with the military exchange system and what I was doing with computers and stuff, and that was coming to an end. My neighbor owned a mortgage company. And he's like, come work for me. So I went to work for him and found out I really liked helping people get into homes because it changed their trajectory for their whole life because now they're homeowners. More kids who are grown up in a home that they own do much better than kids who grew up in a rental. It's been proven. So it's important to have that. Plus it changes. Now you build appreciation in a home that you can pass down to generations. So it's generational wealth when you buy homes.
Wow, amazing. When you buy home, it's a generational weight. When you actually started out with the mortgage industries, what was this earlier challenge that you faced that almost make you quit?
Almost as bad as recently. Rates went up. So the problem with the mortgage industry, real estate industry, it's all driven by what people can afford and the interest rates where they're at. The first time it hit me, I was only in it for a year and it was pretty ugly. So I ended up going to work for Blue Cross and Blue Shield to learn about inside sales. And from that, I was able to understand on the phone what people were saying by the phone. So I got really good at phone sales. Got back in the mortgage industry and stayed in it ever since because of the fact of what I learned in taking all those phone calls in that department.
Wow.
I mean, it's the same thing that kind of got me looking at getting out of the industry in the last 2 years. You have no control over certain factors in your industry and it can get destroyed overnight just by somebody doesn't like the past president or whatever they are, and they do something totally different and causes inflation, which this is a little political, but nobody understood inflation here in the United States because we hadn't had it in 42 years. So you had to be in your 50s to even remember your parents complaining about it. And so nobody understood what was going to happen. Everybody thought it was fine. Everybody gets all this money and we don't have to give it back and it's not going to cause a problem at all. But it caused interest rates to go up 5%. That caused a problem.
Wow, amazing. So you have been in the business for over 25 years. What kept you going despite the ups and downs?
Helping people buy homes and get into homes, it makes a big difference. But I get asked all the time, should I get in the mortgage industry? Should I do this? And I tell them, no, go find another industry that's more stable. The problem with this industry, it's not stable because there's really good years and really bad years. So you have to put money away for the good or bad. Well, why not just go into an industry where you have continual income that, and then do this part-time or something. I don't know. I don't know where it's going to be in the next 5-10 years with AI and everything else that's happening. It could totally change our industry.
Wow. Wow. Thank you. And if you have said financial literacy is key, why do you think so many persons miss it on especially young workers?
Because they're not taught. We're not taught that in high school anymore. We're not taught that in college. And the only people usually teach you is your family, and that's only if they're in that situation. You said you're in Kenya, right?
Yeah, in Nigeria.
Nigeria, sorry.
Yeah.
Totally two different places, I know.
Yeah.
The issue that you have there, do you guys own homes?
Yes, we do.
And how much down do you have to put down to buy a home?
There's not much of mortgage over here compared to
So you pay cash for the place? You have to pay
yeah.
cash?
So most times here we just get to build our house personally and own it. There was not much more of down payment, and yeah, there's not much of that here.
There's not that here. So the United States, there's no way. So in the United States, you go to buy a house, first time home buyer, you can put 3% down. So on a $100,000 home, you only have to put $3,000 down and you can actually own the home. And then over time, that appreciation of that property
Yeah.
goes up, and that's how you make your money. We're the only place in the world that you can do a mortgage like that is the United States. And so that's why a lot of people come to the States to own home, because they can do that.
Yeah, thank you so much for that. For trade people who earn with their hands, why is home ownership such a powerful wealth building tools?
Two things I said: change the trajectory of your family because of the appreciation, plus it gives you a sense of ownership. So when you buy a house today, so as long as I've been in the industry, when you go to buy a house, you have a rent payment. I'm just going to give an example. Say the rent payment is $1,000 a month.
Yeah.
You're to purchase that house, it's usually $1,700 a month. So there's a huge difference between the two, because
Oh,
you are putting equity into you're investing in yourself for the future. Well, during 2020, 2021, 2022, it was cheaper to own a home than rent. So your rent payment, your mortgage was cheaper than that $1,200 payment. So everybody jumped on the bandwagon and go, it's cheaper than rent. I should just buy. And then now what happens on the other side, everybody goes, I should have bought. I'm not going to buy because I can't afford it. So and that's what you run into. You have to purchase as soon as you can, because eventually that whole thing will change. If I'm paying more today for my mortgage payment than my rent, but in 5 years from now, it's going to be the opposite, because appreciation of rents go up while your mortgage payment goes down.
wow. This is really key. The fact that you make reference of owing to inflation, the times has not changed, and yeah, and still it still speak volume to getting it early is still very key compared to because the market will keep changing and inflation is still going to keep playing a roles when it comes to getting homes and yeah. So
And
what else?
so to their point there, the only way to protect yourself against inflation is to own a
Yeah,
home.
yeah. Wow, it's to own a home. That's true. So true. Thank you so much for that, Eddie. So, what are some of the biggest mistakes you see young professional make when it comes to money and real estate?
Biggest mistake people make in the buying a house, is that what you said?
Yeah, when it comes to money and real estate.
Well, the biggest mistake most people make with money is they put a bunch of stuff on their credit cards. That's their big mistake. When it comes to homes, they think they should wait. And our statement is the best time to buy a home is 10 years ago or today.
10
You
years
never
ago
know.
today.
You never know when it's going to everybody thought the housing market in the United States was going to crash and we're going to see a bubble. Now, don't get me wrong, everywhere that people went from, and I'm sorry, went to, away from other states like California, New York and stuff, like Florida, Texas, they're having some issues, but like Florida's having issues because of hurricanes and these condos that have to be retrofitted. And there's another reason why. But overall, the house values we still we've been appreciating even in this horrible market over the last 2 years. That's unusual, very unusual. Usually, we go through like a 2005 through 2012 where house values drop. Like from 2006 to 2008, they dropped like a rock, and people were picking them up really cheap because there were so many houses built.
Yeah.
Well, for 10 years, we didn't build any houses. And then since that period of time, after the 10-year period, which is just 5 years ago, we still didn't build any homes, hardly anything. We're still not building homes right now. So the appreciation, and that's why the house values haven't dropped. There's just not enough homes for the amount of people who want to buy them. But it has slowed down because people don't like the payment because of the rate. Well, that will change. It's going to get a little bit better. It won't get amazingly better, but it's going to get a little bit better. And people have to move and buy something or live in a rental.
Wow. Wow. Thank you for that. So if someone is listening right now, and is working
I
a
hope
regular job,
somebody's listening right now.
yes, it has more like a regular job, but want to buy their first home, what would be their first step they should take?
The first step they should do to take to buy their first home would be go on Amazon and get my book, Financial Freedom. It breaks down your credit, your income, all that stuff. Or actually, forget Amazon. Just go to my website, edparcaut.com, edparcaut.com, because that way I get the money and Amazon doesn't. You can just go and go to the book page and just order it, and it's on there. So if you go to Amazon, I get a dollar or two. If you go direct, I get $3.
Oh, wow. Wow.
Yeah, people don't write books to make money. They write books. Series make money. They turn them into movies and other things. But the stuff, the business books, over time, and when you do multiple, then you start making money. But the whole purpose of my book was just to help people buy a home. And the first chapter is about credit, because you have to understand credit before you can move any further. Because if you don't have the credit, I can't help you buy a house. And then if you have the credit, the next step is looking at your income. If you don't have enough income to buy a house, well, let's go get you a better job. Let's figure out ways to do that. And then once you have the job, then we look at the down payment. The down payment's not major because sometimes we can get it from a grant somewhere else. There's a lot of different things you can do.
Wow, wow. Thank you so much for that. And
No problem.
definitely, I'm going to include the link to your book on the show notes so that my audience can get it. And you have used radio and podcasting to share knowledge. How has the media helped you connect with people differently?
Well, once I got on radio, everybody thought I knew what I was talking about. Because if you're on radio, you must know what you're talking about. And that helped me out drastically. 50% of my business came from the radio station. From the radio station, I got into podcasting and just grown the podcasting side. And then now I have a course coming out for podcasting that's in the works. And I'm also making different little SaaS programs for my course that people can have. Because when you get into podcasting, as you know, all that stuff's expensive. Cast Magic, Opus Clips, all the stuff that you want to do.
Yeah.
Well, I'm creating smaller SaaS versions that will do everything you need at the first level, the second level, and the third level. So because it's just expensive, and you have to do certain things to get your podcast going, because 90% of podcasts fell on episode 3 by episode 3. Of what's left over, 90% of that fails by episode 20. So if you get to 21 episodes, you're in the top 1% of all podcasts in the world. Just 21 episodes. And that's my big push, is to get everybody to 21, because once you get to 21, then you have momentum, you have other stuff going on. So.
Wow. Thank you so much for that. So how important is having the right mentors or guide in the world of real estate and finance?
One more time, the first part.
Yeah, how important is having the right mentors in the world of real estate and finance?
You say mentors?
Yeah, mentors, yes.
Yeah, sorry. I just think it's important to read and understand the process. There's just so many people out there who talk about, buying investment properties, buying this, buying that. You just need to buy some type of real estate so that you're in the game. Because if you're not in the game, you're getting left behind. So
yeah, if you're not in the game, you're left behind. Wow, thank you. So what unique opportunity do you see today in real estate that didn't exist when you actually started out?
Well, right now, because people are afraid, they're shy of buying right now because of what we've seen over the past 2 years. Everybody keeps saying next year will be better. Next year will be better. Don't buy that house now, because it will. We're at that tipping point. I feel I feel one way, and I also feel another way. I think once the tariff things gets done, we're going to see economy take off in the United States. Once it goes through the Supreme Court and it comes out in Trump's favor, I think the whole economy is going to take off. that means there's going to be no unemployment. That means rates aren't in the United States are not going to come down. They're going to stay where they are because they come down off of doom and gloom, unemployment and other stuff like that. Where at first I thought, hey, we're going to see these changes and I see rates come down. I think rates are going to stay where they are and people are just going to make more money and just not care.
People, wow, amazing. So how do you balance risk and reward investing in real estate?
I don't invest as much as I used to. I own property, but I haven't really focused on buying more property. It just I'm focused on additional streams of income. That's what I'm focused on. Real estate is one form; it's a passive, but you need four other ones besides your day job. So you need five
Yeah.
streams of income no matter what. So you need to figure that out. That's something differently than what all my insurance guys that I knew it. All the financial planners knew about the continuing streams of income. Well, as mortgage guys, we get paid one time, it's over. You got to go get your dinner again. And that's different. And I never focused on it because we made so much money, it didn't matter. Well, it's not that way now. It's a lot less transactions. We have 3,500 real estate agents and mortgage and probably 1,800 loan officers in our area, our county, and we're closing in this county 278 transactions a month.
Wow.
Yeah,
Wow.
that means a lot of hungry people.
Yes.
Well,
Wow.
I'm
That
getting
means
mine. Yeah.
wow. That means there's a whole lot of agents compared to what is even available to even date
And
with.
that's what I'm talking about. So when we put everybody in low interest rates, I said we are hurting ourselves. We're going to cause the existing home sales of 85%, which is normally there. 85% of homes that sell are usually existing home sales. They're already in the market. And then you have 15% of new homes. Well, that dropped to 35%. And I said we're going to drop to 40 to 50, and I was wrong. It was even more than that. And so people won't do anything unless they have to because they're in an abusive relationship. The abusive relationship is that interest rate that is so low that's keeping them where they're at when they need
Yeah.
to go do something else. And I tell people, you're in an abusive relationship. It feels good and everything because it's safe and everything, but it's keeping you from doing what you want just because my payment's so low. You can't go off of that. You have to focus on what's best for you and your family. So I have people finally, they have four kids now where they started with 1 to 2 and now they're finally getting that third bedroom or that fourth bedroom because they just can't, it's just causing stress because they're on top of each other all the time.
Yeah. Yeah. So true. Um. So you have worked with thousands of clients. Can you share stories that really stick with you?
No, I'm just kidding. So I checked it out the other day. I was running my numbers. I'm up to over 5,000 transactions I've done, and I'm in the billions of dollars, like close to 1.8 billion I've done in my lifetime of
Wow.
mortgages. If you read my book, in my book has a lot of these different transactions that I did that stuck out, and I'm going to tell you one. I helped some clients of mine buy a property where they wanted to move to forever, which was in San Clemente. It's by the beach and everything. I helped them buy a duplex with an FHA loan, which was unheard of at the time. And they bought the house for $950,000. They put 11% down, which sounds like a lot, but it's nothing. And that $950,000 is worth $2.3 million today, and that's 6 years ago.
Oh, wow. Wow.
Yeah,
Wow.
and that
Amazing.
was Well, that's because they're in San Clemente by the beach, a block from the beach. It was just the right time. They had two houses here. They sold them, put that money into that one. That ended up being about 11%. And I remember telling the guy because he was so upset that the house up here was $10,000 difference in price than what they had it listed for, and he was losing it. I go, dude, you're gonna make $100,000 your first year down there because I'm from Southern California originally. I'm from up here, but I moved down there for 22 years, so I totally understand the market. I said, in the first year, you're going to make over 100,000, and he didn't believe me, and he made 180,000. And so he tells that story to his friends all the time, how much he almost not did what I told him to do, and would have really, excuse my language, screw the pooch. And so that's why it's important to take advantage of buying homes no matter when it is, because over a 10 20 year period those houses will appreciate and you will make money.
Wow. Wow.
And if you
So
can't do it
true.
yourself, get it with a partner, get with a parent, get it with somebody, work it out, and then split the equity.
Wow. Amazing, amazing. I think it's the fulfillment that comes from the fact that you're able to kind of see what you said coming into being and seeing the drastic change. It's quite really amazing. So if you were starting out fresh today with little money, what exact path would you take to build it?
If I would start out today with little money, that's what you said, right?
Yeah.
All right. I just want to make sure that's what you said. Uh, what I would do is first thing I would do is buy a fourplex, because I can buy a fourplex with 5% down. I can rent out
Hmm.
the other three and live in one of them. If I'm a veteran like myself, I can buy the whole thing with no money down. I just have to qualify for the whole thing. But then I get the other 3 units to rent to offset my number. And so basically what happens is you buy that duplex, triplex, fourplex. They'll eventually be paying your payment for you, complete all of it. You have no mortgage. And then at that point, you then go buy the next thing you're going to go buy and then build it that way. The first thing I think everybody should buy is either a duplex, triplex, or a fourplex. So that way they have their first investment property. Because if you wait to buy an investment property like that, you have to put down 25% versus
Ouch.
5%. Yes.
Wow, amazing, amazing. This is really enlightening and a whole lot of things to actually glean from. Being that, yeah, just with 5%, you could actually more like own more like a two, three place, and the fact that the revenue that is going to be generated from rent is enough to actually more like back up the mortgage, and it's quite interesting and very lovely. So,
Yeah. But the problem most people have is they don't understand. It used to be do FHA 3.5% down. You're better off the conventional 5% down because you can use the rents more than you can on FHA. But it's really the biggest headache we run into is you have to really qualify for the whole thing when you're buying it on some of these, because they have not kept up with the rents. They have not adjusted the rents like they're supposed to in some of these older duplexes, triplexes, and fourplex. But that's okay. You can get it up over time. So.
wow, thank you. So, looking back at your journey, what advice will you give to your younger self just starting out?
Get out. Don't go in the mortgage industry. Just invest
So,
more. Just invest more quicker. Invest more and put more away. You always think you have till tomorrow, and tomorrow comes and you don't have enough. Or in my industry, we got hurt so many times. So if you look at my 25 to 30-year career, there was probably 15 years of that was really bad over the
oh,
period of those years. So that's what I'm talking about. So you make really good money and then you live off of it during the bad times, and then you eat into your savings and other stuff because it lasts longer. And the 2006 all the way through to 2012 wasn't the greatest period of time. It wasn't bad. I was doing a ton of short sales for people, even though I was in the mortgage industry. And then now in the last 2 years, if you look at my numbers from 20, 21, and 22, that each year was like as much as I'd done in each year, total of all in the years of my mortgage together, because it was just such a volume that if you look at the last 2 years, it's hardly anything. It's enough to survive off, but not enough to really be happy and move on. So that's why I'm saying you have to go start your own business that you have control of and build something that way. There's so many opportunities today, micro SaaS, all the different things that I found. You can go do your vibe coding and create apps and sell them, and all the different things that I didn't have the opportunities to do. It was just, ridiculous. Bless you.
amazing, amazing, amazing.
I'm
Yeah,
just saying
thank
you have opportunities now that we didn't have. There's so many things that it can stop you from doing anything. Bless you.
Well, thank you. Thank
You
you.
know,
So many opportunity, and I think the fact that it's just coming from you just speak volume to the fact that with technology and everything, there's a whole lot of things that we can do differently, and the fact that business sometimes does not go in a straight line. There are ups and downs. So starting out very early and reinvesting, it's really really key, so that when the downtime comes, your investment can actually pay to actually more like wedge against those down moments when those things those period actually even come into being. So Eddie, what vision do you have of the future, and what do you look forward to your legacy being like?
look forward to the future. I think I think we're gonna eventually have a 25-year boom in the housing market again and mortgage market because of just increase in not like craziness, but just a continuing normal 25 years of growth in that industry. And so I tell everybody, do not sell any property. Keep them all. Wait for 25 years if you can, then sell everything. But it's just that's what I see, and I see there's no other time. I just said this again. Then opportunities out there for you to do something else. I mean, I went to an event last year called last week called Growth Hacking Live. I had no idea what I was going to get out of it. They had this thing called vibe coding. You know what vibe coding is, right? No.
No, I don't. I will check it out.
Yeah, you need to. Basically, it's you can code without knowing how to code. So one of the things I hate
Oh,
is spending a ton of money on Cast Magic and Opus Clips and all those things that I do because I do volume and it's ugly what I have to pay. So I was like, I wonder if, so I went to this thing and I started messing around and I created my mortgage website, the stuff I use to process people's loans and everything. I created my own software. So now I don't have to
oh,
pay $150 a
oh,
month.
with no code.
That's no code. And
Yeah.
so, yeah, so they call it vibe coding over here. And then I created a version of what I call, it was Cast Magic. It's not exactly like that because I trained it up because I talked, I think, originally in the beginning, how I created a whole suite of stuff from people doing podcasts. And I did it because one, I don't want to keep paying for it. And two, I just found out if I $50, I just did it. No big deal. It's doing all the work. I just have to tell it exactly what I wanted to do. There's so much that can be made, anything at all. And that where before you had to know coding, had to go to school for years or not go to school at all and had coding, depending on who you are. And now it's totally different. There's so many opportunities that you can find go find an app that somebody's making a lot of money off. Don't clone it, make it better, and then sell it in the same place they're selling stuff.
Wow.
It's whatever you think now can be created right away. The only thing,
Wow.
like I'm trying to create an app for the veterans in the United States or anywhere that can help them get their benefits. And I know exactly how I want it done, and it's only I can do a lot of it if I vibe code it, but I don't want to. I want to have somebody else create it and instead of costing me $200,000, $300,000, $400,000, it's 30, maybe max 60 grand over time, but I'll get a grant for that because it's for helping vets. It's not for me. I'm just doing it to help vets. So I'm just
Wow,
saying
wow,
the
wow.
opportunities that's out there is amazing. You just have to get there and just start looking into it.
Wow, amazing, amazing. Yeah, thank you so much for that. So Eddie, how can my audience learn more about you? Where can they connect with you? And also where's the better place to actually connect to you and reach out to you?
The best way is just go to my website, edparcaut.com, edparcaut.com. You can click on something, check me out, or you can go find me on Instagram, Facebook, YouTube, LinkedIn. I'm the same person there too, Ed Parcaut.
Thank you so much. Eddie, it has been a pack with wisdom. You have shown us that real estate and homes ownership can be a pathway to financial freedom, especially to people willing to take the first step. For listeners who want to go deeper, check out his book, Financial Freedom, Building Personal Wealth Through Home Ownership, and visit his website at Lending for Living. Eddie, thank you for joining me on the Aro Benaiah show today. It's really a pleasure having you here.
All right. Thank you, sir. Have a great night.
Yeah.